Hey guys, Haro here. I'm sitting in my car waiting for a soccer game to start on a Friday night, and thought I would come to you to talk about the stock market today, and how it relates to real estate. Had a client reach out to me, not reach out to me, we were just talking by text. And then I think a lot of our team members recently have had clients really concerned about how the stock market's going to impact real estate and the uncertainty and tariffs and obviously a lot of wealth was wiped out yesterday, and I think today as well, although I haven't caught up with the news yet. Yesterday was the second biggest day of market capitalization lost. Like $3.1 trillion of wealth were erased yesterday. And obviously, if you're somebody that's conditioned to, all of us are really, to look at our accounts on a daily basis, on our apps, on our phones, we see these undulations, these wild swings in the value of our portfolio. And I'm not really even sure that the value of our portfolio is connected to whether or not real estate is a good investment. So a lot of people are connecting the two, though. And I think part of this is that we're just conditioned to think about the fear du jour, the fear of the day. Like when you go to a restaurant, they have the daily special or the daily this or that. And we think about, hey, I'm going to order the special of the day or the thing of the day, the dessert of the day, etc. And this is kind of like the fear of the day. If yesterday was the second biggest day, it's interesting that the biggest day was in 2020. So not that long ago, and look how far we've come. And I know, at least in my app, for a lot of the accounts that I will track, the app is Vanguard. And you get to look in Vanguard at like how your portfolio is doing year to date, which looks really bad right now, year to date. And then 1 year, one full year, so back 12 months, and a 3 year, and then a 5 year, and then an all time. And if I look at my portfolio over all time, it's up. 5 year, it's up. 3 year, it's up. 1 year, it's up. Year to date, it's down. I think we just really need to take a measured approach when we look at these things. And I don't know that it really impacts the real estate industry. I think if we look at the real estate industry as an investment like stocks, we're making a mistake. It's a fundamental, I think it's an attribution error. I'm not sure if I'm using that word correctly, but it's a fundamental, like the two are not the same asset class. So first of all, I would never buy real estate like I buy stocks. Many people buy stocks for the short or medium term. With the real estate, I've always encouraged, and I will continue to encourage all clients to buy real estate and just hold on to it. Most of the real estate that I've bought in my life, I actually have not sold, and I continue to own, whether it's ones that I've lived in or ones that I bought for investment purposes. The beauty in the real estate is if you hold it for the long run, particularly if you pick a location that has good economic fundamentals for the long term, then, and some of that's chance and some of that's just knowing their market, that's a different conversation. I'm not going to dive into it, but not right now. I could do it on another video if you're interested in that. But if you buy real estate for the long haul and wait, for instance, I've bought a lot of real estate here in Greenville, South Carolina, and that has been above average returns because it's an area that long-term potential for a number of reasons is really good. So I think we need to think about real estate as a long-term hold. And if we think about real estate as a long-term hold and we're not looking to cash out and make money over the short term, if you're looking to make money over the short term on real estate, the risk does go up, and you may get on the wrong side of that equation. But I think if you're going to hold real estate for a 10 plus year window, which for me 10 is like a very minimum number for how long I want to hold real estate, 10 years, 20 years, 30 years, 40 years, 50 years, 60, 70, 80, 100 years, That's kind of what I'm thinking about. And obviously that extends on into the next generation and that kind of thing. That's the type of thing I'm thinking about, where the value of the land and the property on it, because if you have a long enough window, you can do a lot of stuff with that property. So we just need to think about real estate in a different way than we think about stocks. Now, if some wealth got wiped out because of stocks, it was paper wealth anyway. It wasn't real wealth. You don't actually realize the wealth, the value of the stocks, until you sell them. So, like, we see our portfolios go up and we're like, ooh, we have that much money, but you don't have that much money until you actually sell it. So that's another thing to remember. And then lastly, like, honestly, I was talking to someone today, and cash, money, stock markets, all of it, like, we were talking about the relative feasibility of crypto and, cryptocurrency and Bitcoin and that kind of stuff. And, there's an argument to be made that that's a good store of value. And there's an argument to be made that that's a risky store of value. But I would say that same argument is to be made about the US dollar. It had more intrinsic value when it was backed by gold. It has less intrinsic value now. It's only valuable because someone says it's valuable, and we attribute value to it. So at the end of the day, I think we need to have a fundamental understanding that our security and our hope can't be in money. Like, currencies rise and fall. And I know we've had a long period of time that's stretched over hundreds of years in the United States where our currency has been stable. But historically speaking, if we take the long view, currencies rise and fall. And so our hope cannot be in that. We can work, we have minds, we have hands, many of us, and obviously there are people that have struggles with that kind of stuff or are less able than others, and that's a different story and a different set of considerations. But the stock market's going to rise and fall. It happened in 2020, and look where we are now in 2025. And a week from now, there's going to be people that have made a lot of money on this thing that went down yesterday, because they're going to buy the dip. They're going to buy the low point. A month from now, that's going to be the case. A year from now, that's going to be the case. 2 years from now, and honestly, with stocks with good fundamentals, if you hold them from the long run, chances are they're going to be doing really good. This is also, I know I'm rambling, but this is also one of the reasons I choose not to buy individual stocks. I won't get into that. That's another conversation. I have not chosen to buy individual stocks for myself. So back to the real estate question. Obviously, if someone's got a lot of wealth tied up in the stock market and they've bought a lot and it's down, like the paper profits that they hadn't realized yet are down, so they're not able to take those profits in this current case. Like, it's a lot of irrational fear right now, and fear begets fear, and then people start acting on that fear, and that creates more fear. And so everyone needs to take a deep breath and realize that these things go up and down. All assets have rise and fall to them. And what we have experienced for the last couple hundred years is that, generally speaking, the stock market is something that goes up over time, and we just need to hold on, make good choices, keep going, and learn the fundamentals and learn the basics. Right now, the media is making so much money because the way they make money is to peddle fear. That is a money maker, because people are clicking on articles because they're scared, they're worried, and so you see more ads, and I bet you the algorithms are making tons of money right now. Anyway, those are my thoughts. I know I've rambled a little bit, but hopefully some of this was helpful to you. Money is not your hope. Money is not your security. Money is not your stability. It can never be that. It can be used for good things, and it's required for life. And assets are going to rise, assets are going to fall, currencies are going to rise, currencies are going to fall, countries are going to rise, countries are going to fall, and we're still here. So enjoy this beautiful weekend. Thank you for listening. Subscribe to this channel. And if there's anything you want me to speak about or like make some points about, I'm happy to do that. And that's all. Signing off. Have a great day.